I'm Aaron Christopherson, Certified Financial Planner and Managing Partner of Pinnacle Wealth Advisors. We hope you all had an incredible start to the summer and are enjoying your vacations in this beautiful weather. I'd like to take just a few minutes to share what's happening in the economy through our quarterly commentary, what we're watching as an investment team, and most importantly, what it means for you as an investor. If you've followed the headlines this quarter, you've probably seen plenty of reasons to be concerned. There's been inflation and higher interest rates and conflict in the Middle East and questions about the Federal Reserve. And as always, there's no shortage of predictions about where the market is headed next. The challenge with headlines is that they're designed to capture attention, not necessarily provide perspective. And when we step back and we look at actual economic data, the picture is much more balanced. Let's start with the economy. Despite all the uncertainty, the U.S. economy has remained remarkably resilient. Economic growth has continued to surprise to the upside, and one of the biggest reasons is that businesses are continuing to invest heavily, particularly in technology and AI infrastructure. While consumer spending has cooled somewhat, strong business capital expenditures, or what we often call CapEx, have helped keep the economy moving forward. Now that's encouraging because it tells us companies are still investing in the future rather than preparing for a recession. The second theme we're watching is inflation. Now, inflation has come down significantly from where it was a few years ago, but it hasn't completely disappeared. Energy prices, global conflicts, and continued demand for technology have all contributed to inflation staying stickier than expected. Because of that, the Federal Reserve has shifted towards a more cautious stance. Earlier this year, many investors expected several interest rate cuts, but today that outlook has changed considerably, and it's becoming more likely that rates remain higher for longer while the Fed waits for inflation to move closer to its target. So while interest rates can create challenges for borrowers, they also create opportunities. And for the first time in many years, high-quality bonds are providing attractive income again. This gives investors another meaningful source of return beyond stocks. The third story, and probably the biggest long-term investment theme today, is artificial intelligence. Now, I believe we're still in the early innings. Businesses are investing hundreds of billions of dollars into AI infrastructure and data centers and software development. Those investments are helping drive productivity, improve corporate profitability, and support earnings growth across many sectors of the economy. Now, will every AI company succeed? Of course not. But much like the internet transformed business over the past few decades, AI has the potential to reshape how companies operate for years to come. So what does that all mean for the stock market and for you? Well, one of the reasons markets have remained resilient is because corporate earnings have continued to exceed expectation. While market valuations remain above historical averages in some areas, particularly among large technology companies, strong earnings have helped justify much of that strength. Could we see more volatility? Absolutely. In fact, I'd expect it. One of my favorite reminders is that volatility is completely normal. And historically, the market experiences meaningful pullbacks almost every year, yet over longer periods, those temporary declines have often been followed by new highs. That's one of the reasons we spend so much time focused on long-term planning instead of short-term headlines. So here's the bottom line. The economy isn't perfect. Inflation remains something we have to monitor. Interest rates may stay elevated longer than many investors hoped. There continue to be soft patches in areas of the housing market, and geopolitical risks will always create uncertainty. But businesses continue to innovate. Corporate earnings remain healthy and consumers are still spending, and history continues to remind us that disciplined long-term investors have been rewarded for staying invested through periods just like this. So at Pinnacle, we're not trying to predict every market movement. We're building portfolios designed to help you achieve your goals through every market environment. Whether markets are making new highs or navigating short-term volatility, our commitment remains the same: to provide thoughtful advice, disciplined investment management, and a long-term perspective you can trust. We want to thank you for allowing us to be part of your financial journey. If you have any questions about how your portfolio or if your goals have changed, we'd love to have that conversation with you. I want to thank you for watching, and we'll see you next quarter for our commentary.